think when you think about fund of funds, or in fact anything, you know, innovation and evolution is part of it. And I think as the market has migrated, things have changed, risk profiles have changed, the way secondary managers have applied investment strategies, and you know, kind of looking at pricing these days, financing and innovation has become intrinsic to that. So I think it's more an evolution than a revolution, which is quite exciting.
So I think in terms of our view on leverage in secondaries transactions, if you look at you know, where we've come on our journey of providing finance to that market, you know, the first transaction we did was in 2012. You know, it was at a very low LTV of around 20%. And when we first looked at this from a lending perspective, you know, we viewed this deal to be very diverse. It was, you know, something like 5 fund of funds and 500 underlying assets. And for a new lending concept, from a credit point of view, the diversity was something which was attractive in terms of your future cash flows. If we look at where the market's gone from then to now, that transaction would, you know, almost be on the specialist side in terms of the diversity that we look at now. Is you're now looking at 50 fund of funds and 5,000 underlying companies. So, you know, where we've seen the market evolve to is that on the bigger transactions, a much more commoditized lending offering based around diversity. Where we're seeing the market go now, you know, as the volume of these deals is somewhat drying up, is towards more bespoke specialist financing solutions. The deals may be smaller, but they're much more complex, and therefore you need to partner with someone that, you know, has a very good long-term understanding of fund structures.
I think that there is a myth in secondary leverage that there is only one solution. There's actually a lot more, and it ranges from capital call facilities to asset-backed facilities to dividend recaps, all the way through to now hybrid solutions, which to me is really where the market is starting to evolve itself. So, you know, I look at the acceptance level and where we've moved over the last sort of 5-10 years, and it's gone a huge way. It was a point where nobody wanted to use it or accepted it, to the level of now saying we want to use it. And the different products are people have different levels of acceptance. Our research said something like 76% of funds now use capital call facilities. And in 2017, people expect over 65% of the facilities to be hybrids. So I see, you know, each product innovating in itself in a different way. Each having a different level of acceptance, but more specifically, people really understanding where they're used and why they're being used. And that allows us, as people provide those facilities, to give a much better solution to our clients.